How does IBR forgiveness work? If you are feeling overwhelmed by student loan debt, you might be curious about income-based repayment forgiveness. Let's break down how this process works and how it relates to bankruptcy. Income-based repayment forgiveness is designed for federal student loan borrowers. If you make payments under this plan, you can have your remaining loan balance forgiven after making a set number of qualifying payments. Typically, this period lasts either 20 or 25 years. The best part is that your monthly payments are based on your income and family size, making them more manageable. Now, let's talk about how this connects to bankruptcy. Starting July 1, 2024, there is a new regulation that allows borrowers in Chapter 13 bankruptcy to receive credit toward income-based repayment forgiveness. This means that if you are making required payments under your bankruptcy repayment plan, those months will count toward your forgiveness timeline. Previously, borrowers could not earn forgiveness credit while their bankruptcy case was pending. This change is significant because it helps borrowers progress toward forgiveness even while managing their bankruptcy. However, it is important to note that student loans are not automatically discharged at the end of Chapter 13 bankruptcy. To have student loans discharged, you must file a separate adversary proceeding and prove undue hardship. This is a high legal standard that requires showing that repayment would impose an insurmountable financial burden. Thankfully, the new rules that credit payments during bankruptcy toward income-based repayment forgiveness may reduce the need for discharge. Borrowers can work toward forgiveness while in bankruptcy, which can be a relief. For those considering bankruptcy, enrolling in an income-based repayment plan and filing for Chapter 13 bankruptcy can work together. You make payments according to your bankruptcy plan, and those payments count toward the income-based repayment forgiveness timeline. This integration helps you avoid losing credit for forgiveness during bankruptcy. Another important point is about tax implications. Currently, forgiveness of student loans through income-based repayment plans does not trigger tax consequences through the end of 2025. This is something to keep in mind as you plan your financial future. In summary, income-based repayment forgiveness works by forgiving remaining student loan debt after a borrower makes a required number of payments based on income. With recent regulatory changes, borrowers in Chapter 13 bankruptcy can receive credit for payments made under their bankruptcy plan. This helps them progress toward loan forgiveness, even in the complexities of bankruptcy.